2024. My name is Oliver Dixon and I'm your MC for the stage. And as we welcome people in, I just want to ask everybody if we can just slightly move forward so that the latecomers, I guess, can just move to the back if you're not too uncomfortable with that. Thank you so much for coming. Really do appreciate it. Give yourselves a big round of applause. This is going to be an amazing rendition of the Africa Energy Week. Bigger than any previous rendition of it, and certainly better than any previous rendition for it. What we're going to be focusing on here in this interactive workshop is to provide insights from professionals and peers on various facets of the future of energy. This pre-event workshop will be starting with Rystad Energy. Rystad Energy is going to be talking to us about where the near-term growth is coming from and what the challenges are along the way. And that's going to be the focus of the first session. I want to welcome the moderator for the first Fireside chat onto the stage, Ibitola from Rystad Energy. Ibitola will be joined in an esteemed panel by Magnus, Nysveen, who's the Chief Analyst and Co-founder of Rystad Energy, Ibitola, Ukabam, who's an Associate Vice President at the Africa Finance Corporation, and Cloke, who is the Chief Operating Officer and Co-founder of Afentra. Can we welcome them all on stage and engage in this Fireside workshop? Ibitola, take it away.
Thank you very much. Good morning. Thank you for joining us for this first workshop. Prior to the Fireside chat, we have a small presentation to go through where the near-term growth, where is it coming from, and what are the challenges along the way. And that is going to be presented by Pranav Joshi, Head of Upstream Research for the African market at Rystad Energy. So Pranav, please come on stage.
Thanks, man. Good morning, everyone. To start before the Fireside chat, we would be talking about some of the We will be talking about some trends that we are seeing in Africa and talk about what's happening, who is exploring where, what's happening with the deep water landscape, and also potentially discuss some of the challenges that could be faced along the way. To start off with, we begin with the exploration story first. And to start off the exploration story, it's always good to revisit the list of high-impact exploration wells that were planned for 2024. And if you see this map, there is a huge contribution coming in from the majors. A lot of these wells are being drilled offshore. How we define high-impact wells is either they are targeting a very large prospective resource base, it's a very key focus for a company, or it's targeting a very frontier basin. And when we see these wells on the chart, about 40% of these wells are targeting frontier basins, and about 60% or more are being operated by majors. This shows the continuous contribution and huge commitment by the majors, especially in the exploration landscape in Africa, focusing more on the deep water offshore side. And if you see, we have more concentration on the Atlantic Basin side in sub-Saharan, and it's only Egypt which is taking the lead of the North African countries who are focusing on the deep water side. Continuing the trends that we see on the exploration side, when we see on the left-hand side is the licenses that were acquired by different companies over the last 5 years, or close to 5 years, since 2020. And on the right-hand side, it's the discovered volumes that have been made. And when it comes to discovered volumes, these are not the prospective volumes, but a bit of a discovered resources that we believe can be produced commercially. comes to the exploration licensing activity, we see Egypt takes the lead, followed by Angola, and these are the countries that have been planning licensing rounds every year. We have Cote d'Ivoire, we have South Africa and Namibia as well, which are also leading some of the deep water discovered volumes or even the licensing activity, especially with the recent success that we have seen in Namibia. We were in Windhoek as well earlier this year. When it comes to Namibia and Cote d'Ivoire combined, which are the two countries in Sub-Saharan that we have seen a lot of recent success on the deepwater exploration front, these two countries combined potentially can produce about 1 million barrels per day by the middle of next decade. And if, of course, there are many appraisal activities going on with the gas discovery in Mopane, more exploration activity like Chevron, Pranav, even BW Energy, they all have plans to drill exploration wells, probably later this year or next. And any of these, if successful in finding more volumes, will only increase that 1 million barrels per day of potential production. Having talked about the exploration side, it's also very important for us to understand what's happening on the global oil demand landscape, and especially what could be the potential energy transition scenarios. It is slightly busy chart, so I'll just take a minute to explain what we are seeing. On the x-axis is the global oil supply potential. On the y-axis, we have the break-even in Brent equivalent. And what you see on the green shaded box is the range of break-evens that would be required to meet the oil demand in 2040. So in short, we are looking at the cost of supply curve for 2040. And when we see how much of break-evens is needed for the supply to match the demand in different energy transition scenarios, we come with a $50 to $70 per barrel range. And when we were just talking about the deep water success, and we have seen that play out globally as well, where over the last decade, compared to what we saw in 2000 to 2010s, the share of deep water contribution in terms of discovered resources globally has gone quite significantly, and is close to, I think, about 45 to 50% in terms of global discovered resources, of course, excluding shipping. But when it comes to Africa, we have seen Cote d'Ivoire and Namibia with the likes of Benin by EMI, Venus, Yonker, Mopane in Namibia. Deepwater segment is proving to be quite competitive, with $50 to $70 per barrel price range in terms of break-evens needed to match the 2040 global oil demand. These deepwater segments have about $25 to $40 per barrel break-evens. You have Guyana, which is the most competitive, with break-evens between 25 to 30. You have the likes of Suriname, where we had a recent sanctioning as well, FID. We have Norway, Brazil falling all in similar category between $30 to $35 per barrel. And you have, for example, UK, Cote d'Ivoire, and Namibia falling between $35 to $40 per barrel. And if we just look at the global cost of supply curve, if we switch it and just focus on Africa. So when it comes to Africa, as you can see, the highest point on the orange line for 2040, the continent hosts potential to produce almost 10 million barrels per day. But when we talk about some of the independents and the E&P producers, especially in Europe, and it is also an indication of how usually the majors are also planning their budgets. We see when it comes to filtering criteria in the portfolio, these majors or independents are targeting break-evens of below $30 to $40 per barrel. So what it means for the different countries in Africa. On the table on the left side, we try to look at the Africa cost of supply curve, and then we also looked at some of the key producing or upcoming countries within Africa. And legacy oil producers like Libya in the north. Nigeria and Angola, of course, have been producing oil since many years. And we tried to see how much of that supply would fall below $40 per barrel. And because the reason to tie it with how the European companies are planning, it's also because majors are especially involved in these deep water positions in Africa, and they continue to do so. The up-and-coming countries like Namibia, about 85% of the supply potential has break-even less than $40 per barrel. So it's less risky. While countries like Angola, they are at about 60% of their potential supply on the liquid side falls below $40 per barrel. And we have different, and some of these countries like Nigeria and Angola, they're going through a huge change in the player landscape. We have the likes of Afentra also found into Angola, and then Nigeria, of course, there are some divestments in play. But Nigeria especially, it hosts a lot of potential. However, when it comes to how much of it is below $40 per barrel, that's where some of the challenges we are seeing, and we have seen as a result of that, there have been deep water projects that have seen delays for many years. So that's where some of the countries will have to consider some fiscal incentives. And with options now available to majors, with the likes of Namibia, where there are lucrative fiscal terms as well, and the deep water supply being cost competitive as well. Some of these legacy producers might need to consider providing some more incentives to retain the investments going forward. And we are already seeing that play out in Angola, for example, where they have given some fiscal incentives, reduced cost, increased cost recoveries, reduced taxes, and so on. And when it comes to FID activity, in this chart we see the total sanctioned resources by FID on the x-axis. We had seen in Africa about close to 2 billion barrels, or 18, 19 million barrels of oil equivalent being sanctioned between the 2015 to 2019 on average. And then we saw a period of muted FID activity with only about 330 million barrels of FID between 2020 and 2024. But Africa as a continent is at a cusp of, again, a resurgence of FID activity, and that is being triggered by some of these countries like Namibia, where we expect Total to sanction their Venus terminal. Of course, Area 4 in Mozambique LNG, that's also the big ticket project that we expect to be sanctioned in 2026. So this would take the, on an average, FID with those sanctioning activity to close to 2.3 billion barrels in the next few years. And although you see a slight drop towards the end, but there is some of these projects that have been challenged for different reasons. But if they can be addressed, we can see that number going way above 3 million barrels. And then when we talk about different risks, we do have some perceived risks related to financing, time of development is also one important risk. And what we tried to do in this was to assess for offshore only how much time will it take for the producing fields that were discovered since 2000s, from discovery to FID. So that's what you see on the x-axis, and on the y-axis you see how much time did it take for them to produce after once the FID was announced. I want you to just focus on the bottom left part, where you see a huge bubble on the North African side, which is the Zohr discovery. And then of course you have some of these Area 1 Mozambique and some of the small scale FLNGs like Coral Mozambique and Waterline project in North Africa. And then we have the deep water discoveries, which went through an oil price crash as well, so there is some delay because of that. What has worked for Africa is Zohr, where we saw there was a domestic market that was already established in Egypt. And then we have some of these FLNG projects, which have been insulated from some of the security risks that we have seen, especially on the onshore LNG side in East Africa. And even we saw the success play out in Mauritania with the Proteomining project by BP following through. However, some of these big ticket LNG onshore projects that have faced significant delays. And when we see the same, instead of producing fields but move towards pre-sanctioned projects, you see a lot more delayed projects, and especially the ones that come to the top in the green, which are gas condensate discoveries, are the big discoveries on the east side, being Tanzania and Mozambique. And then you have various oil projects which have been discovered but haven't been prioritized yet by these majors. It could be due to the underinvestments that exist in Africa by these majors in the recent years, which could be triggered if we are able to address the challenges on the fiscal incentive side. But when it comes to Tanzania and Mozambique is quite clear in terms of risk being the security side, but Tanzania as well, that has a huge potential in terms of onshore LNG, but that has also faced delays due to the discussions that have taken quite a lot of time. But those discussions have also been to address the fiscal incentives. So this fiscal incentives is coming out to be a true risk, which the countries are recognizing more and more. And the legacy oil producers have also started to come up. And also saw some fiscal incentives being provided by Nigeria as well recently for some of the gas developments. And we had the Energy sanction to beta field, for example. And we discussed on Zohar was particularly a discovery of around 30 BCF, but with a record development time of less than 2 years, led by ENI. But what has worked, especially in Africa, is the already established infrastructure and the domestic market. We have seen that lacking a bit in sub-Saharan Africa, and that is why we have seen some of the major prioritizing LNG developments to secure the global LNG market. What probably has to also happen is to develop the African gas market, and for that there will be the vertical of the infrastructure that has to be addressed for that. And this map kind of speaks clearly in the sense that when we see the stranded assets, so these are the fields that are not yet approved or FID, and you see very less of these gas fields in North Africa. So most of the discoveries have been connected because of the infrastructure that was already established. We have seen wherever there is a need to create that domestic market, that has faced some challenges in terms of delays and financing as well. So with this, I'll just wrap it up by saying that majors continue to play quite an important role when it comes to the deep water exploration side, especially on the frontier basins. Africa's deep water sanctioning is at the cusp. We are going to see after a muted period of 4-5 years, the sanctioning activity on average picking up to about 2.3 billion barrels. Security and regulatory risks need to be addressed, but fiscal incentives, like some countries have already considered, they have to be promoted even more to create that investor-friendly environment. And finally, the infrastructure to promote the gas to power grid that will also increase the energy security in Africa. That is key to create that alternative market for these standard gas assets. Thank you very much. And over to Ukabam.
Thank you, Pranav. Thanks very much. So yes, just for those that probably just walked in slightly late, my name is Ibitola, and I am Vice President at Rystad in charge of the African market, and a number of my colleagues are in the room. I have the pleasure to introduce a panel for this fireside chat, starting with our guest, Cloke, Chief Operating Officer and Co-founder of Afentra, Ibitola, Ukabam, Associate Vice President, Africa Finance Operation, and last but not least, Magnus, Nysveen, Chief Analyst and Co-founder of Rystad. So you're welcome, and the conversation is based on what kind of passages presented to us here. Where's the native coming from? So this is going to be very conversational. We will have about 10 minutes for questions and answers, so please make sure you have them available. We want to make this as interactive as possible, but we want to listen to what these industry experts have to say. So Magnus, I will kick off with yourself, of course, with our view from Rystad Energy. Where do you think that native would be coming from?
No, I think that it's a lot of very interesting numbers that we just saw on Africa upstream activities. First of all, that the returns are extremely good when break-even prices is at in the 30s and the forward price is at 70. It's obvious that you have really good returns on the investments in the fields in Africa. And the risk is overestimated by most investors and banks. And surprisingly, the activity level is extremely low. Pranav showed us that every year over the last 5 years, only 300 million barrels of oil has been approved for new development every year, while production is at 2 million barrels. So we are replacing only 10% of the production in Africa by new projects. And also exploration is way too low. So the Africa production levels can maybe be sustained for the next 10 years by the inventory of discoveries, but after that the activity is surprisingly low. The returns are good. There is a lot of capital around in the world, so it's just something that it doesn't seem to add up. When you look at the data, when you look at the opportunities and enormous resources to still be discovered in Africa. This is maybe the last 40 years for new discoveries. If those who are forecasting very high oil demand for the next 30 years, it's actually only Africa than in the long term, together with maybe Middle East, that can sustain so high oil demand.
Thank you. Afentra has been in the news for some time. There's a lot of great things you guys are doing. What are your views on that?
I think it's a really interesting question. We just a bit of background on Afentra for those who aren't aware. We set up the company in 2021 as a midlife asset redevelopment specialist focused on West Africa. So the aim was to redevelop, extend, reduce emissions. West Africa focused because of the history we have in the region. And we've been working with that Solomon on an asset that we own on 305, a very large asset, 3.5 million barrels in place, 1.3 million recovery, and with a large price to go. So some of my views will be reflected on the midlife side. But I think from when I look at it, deep water, greenfield has driven a lot of growth. But I think there are some headwinds out there. Is that if you look at the capex curve, you look at the costs. When we were drilling in the previous company, Tunnel, I could get deep water drill ships for some $200,000 a day. Those costs have now doubled or even tripled in places. So the benefits of, let's say, Guyana, that was being sanctioned in 15, 16, 17, are starting to catch up. When you want to do a deep water development, you want to discover it at a very low price, and you want to sanction it at a low price, catch the cost curve, and go up the other side. Well, the cost curve is catching up, and it's not only the inflation that you see in rigs, you see the inflation in all the services, trying to get access to the yard for an FPSO, given what happened in Ukraine is causing problems. So there's a lot of discoveries out there. there's a lot of potential in deep water, but I think that what we have to be aware of is where they sit on the cost curve and when it comes to development, those costs associated with it. So when we look at it, there's obviously the greenfields where the deep water, the majors are focused. We're focused much more on the shallow water. We think there's a lot of prizes in the shallow water with redeveloping assets, reducing emissions. And I think that there's also a lot of stranded oil out there in Africa that if the right environment, the enabling environment changed, so onshore Nigeria, the Sudan, up in Libya, that you could actually bring on very, very quickly. However, the question is, can that environment actually change to enable that near-term production?
Interesting. Ibitola, from the finance angle of things, AFC, of course, has done a lot of investments Africa-wide. What are your views on, for example, EN's points here?
So, globally, energy demand is forecast to grow, and interestingly, about 85% of that forecast growth is expected to come outside of the developed economies. And a lot of that is contributed by Africa in terms of growth. If we think about the supply growth sources that we've just described, it's mostly the majors and the offshore assets. But a lot of those activities are hinged on export to the developed economies. The reason for that is mostly because of the infrastructure deficit that makes it difficult to connect some of the resources back into the African economies. So I see a situation where majors may continue to be slowly taking decisions about investing either in exploration or development in order to match their development with export destinations. And interestingly, the advanced economies where you target for export have diversified sources of energy. So gradually, they are mining down fossil fuels, and then will the majors continue to say, okay, do we tone down this year and next year there's a reason to tone down. That sort of swing up and down is not really going to give us a steady development. I think that this is the core reason why, as AFC, we think there needs to be focus on how we solve that infrastructure deficit within Africa. Ensure that we can have integrated value chains that help us deliver energy resources back in continent, into industrial activities, into domestic power demand, domestic energy demand. And when we think about it that way, the work to do is quite a lot and it's diverse, right? And I think that you would also eventually talk about the challenges, but I just wanted to first identify that there is a lot of work to do in that infrastructure connection space, such that African energy demand can also be fed and be a driver for the supply growth. Yeah.
So besides okay, incentive is important, you know, to help to encourage more exploration. But then there's across this, you know, panel, there's conversations around, yes, the opportunities there, exploration strategy, but infrastructure is also a big deal. And if companies, you know, or countries incentivize companies, maybe I can use Norway as an example, where the Norwegian government does incentivize in a way and help to attract a lot of exploration activity. Are we seeing an opportunity in that? Is there going to be an opportunity for that rather in specific nations, say the ones Pranav had listed here, where there's growth potential, would be Nigeria, Libya, Angola, Algeria, of course Namibia, with all of the almost quarterly discovery that they've been having, which is great news, Congo, Ghana.
there's probably there needs to be more incentive to make to make them competitive on the global stage. But then infrastructure is also an issue. Magnus, what are your thoughts around this?
I think that there is just way too little rounds and new leasing activity in Africa. And if you look at Pranav's number, he said that there is only I think he said that it's something like 30 million barrel every year that you can in the future find because of new leases. It's just a ridiculously low number. Maybe we underestimate the resources in these leases. But I think that, but maybe the government doesn't see enough interest in the leasing. But I think that is something that the governments just have to put up more rounds, more leases. There is capital out there. The majors, they have cash. There is, if you look around Africa, that you have just a new basins that has been opened up over the last 20 years. It's the entire coastline is full of resources, and there's just so little lease activity. I think that's maybe the start of the problem. Companies, they will come, they will explore, especially the majors. But I also think there is more and more capital for small E&P companies coming from the Eastern Hemisphere. So I think there is a lot of possibilities on more exploration, more leases. But that's where it's starting.
Okay. That's really good. And Ian, as you guys, Afentra, don't necessarily focus on exploration. You go on, midterm, sort of midlife assets. What are your growth potentials across Africa? Of course, Angola, we know you're there. But what are the plans for Afentra?
In terms of assets?
Yes.
Well, the reason we set the company up is we felt that West Africa was going to go through the same type of transition that you've seen in the North Sea, the Gulf of Mexico and Norway. And that if you look at those transitions from the large majors operating assets, that's been going on for 25 plus years, and it's still got, well, in some countries, 25, 30 years still to run. So we felt that was going to happen in Africa, that in the future the majors would focus more into maybe the deep water where they are historically, but moving out of the shallow water. And if you look at how the North Sea's played out, if you looked at the names of the companies 20 years ago and you look at the names of the companies today, I mean, you wouldn't know half the companies if you were looking at it 20 years ago. So massive change. I think the other key thing, though, what we felt with Africa, given our experience, is that in the Gulf of Mexico or the West Africa, in the UK, is it's actually quite a simple market in that buyer, seller, shake hands. Government historically hasn't really had a major role to play. But in Africa, these assets are so important to the host countries, employment, revenue, and so you have to marry buyer, seller, and listen to and understand what the government is looking for and understand how you contribute. So we ended up, our first deals were in Angola. If I look at how Angola's changed, and there'll be the session a bit later today, but when ANPG, the regulator, was set up and it was spun out of Senegal, I mean the changes in the fiscal terms, the extensions, they've seen a reversal of what was happening before. You've had capital come back into the country. The big majors are investing in 17, 15, 14, 0, 32, 31. But at the same time, they've really gone out to encourage smaller players like Afentra to come in with midlife skills to revitalise assets. So I think that if you've got the right enabling environment, if you've got a country that is prepared to look at the fiscals, be sensitive, listen to the companies, there's a lot of opportunity. And you look in that shallow water bound to onshore, well, there's a lot of assets that could extend, and that near-term production growth, if you're in shallow water, You can do short cycle tiebacks. The returns are there for all in the production to be grown.
Fantastic. Ibitola, I know AFC is engaged with projects in Ghana. Of course, we also know in Nigeria the majors are, of course, mostly exiting onshore assets, and they're very much active in the offshore space. So what are your investment strategies per se in West Africa? I know the investment is Africa-wide and of course more infrastructure based. What are your growth opportunities? What's the financial goals for AFC supporting maybe the small players, so to speak?
Yeah, thank you. Magnus already mentioned that majors don't quite have a funding problem. I think it's majorly for them a capital rationing problem. But when we talk about the smaller E&P companies, we are quite passionate about helping them solve the financing puzzle. What are the challenges we find? There is limited access to capital for such entities. Part of that is because of perceived risks in Africa, whether from the security side or the political instability side or the policy inconsistency side. There is also the part that lack of information plays. And then the fact that some of that information could be more available if the small E&P companies were listed, for example, and had reasons to periodically provide detailed information that will infuse the way that risks are perceived. The universe of lenders to oil and gas projects in Africa is continuously shrinking. But we try to stay active. But what we find in current days is most project owners, most E&P companies are looking for financing in a way that is more debt dependent. And perhaps that's because of the shallow access and shallow penetration of capital markets. So I think on one part, a lot more work needs to be done to build and strengthen the capital markets in Africa. But more so because E&P companies need access to foreign currency for the initial capital investments, listing and penetration into global capital markets is quite important. But we're not going to do that just from the get-go. There is the need to build risk management frameworks and strategies, as well as enhance corporate governance in a way that will allow such entities break into those buckets of funding. And there goes how we solve the information problem, because by the time we are able to access such markets, the information asymmetry sort of gets solved, right? And then it's solved consistently because information goes on consistently. And then we can access some equity capital for such entities. That moderates the amount of
pixels on the camera or on the screen.
Allows them to survive better. And then with that level of tapping into foreign global capital markets, you would also find that the same information solution that you have provided to tap into those markets helps us to reestablish the interest of
some bits and pieces, but it's hard to follow the conversation.
And then we can possibly solve the game. I'll take for an example.
I can pick up some bits and pieces, but it's quite hard to follow the conversation.
The real poster child for what I've just described. When they started quite small, we moved to small assets. What they focused on was building a very resilient entity, focused on the field development plans and delivering on what they have said that they will do. Focused on providing information to their financiers. They focused on enhancing their corporate governance as they went along. And they assessed the foreign markets by listing in the UK, for example. And afterwards, they have also been able to get bonds from Norway and just create a very robust and resilient capital book. And that has come through in how they have been able to achieve the growth that that company has achieved. I think that this is the sort of template that most African EMPs need to embrace. It's a lot of work, it's a lot of consistency and conscientiousness that we have to put into that. But I think that is the only sustainable way to re-establish capital flows into African energy. Thank you.
Okay, thank you. I think the three gentlemen on the stage have spoken very wide, given the topic. We've gone from finance, we've looked deeply into exploration strategies, we've looked into the potential, the opportunities in Africa, the coastal area of Africa, and of course, the great work that Afentra is doing, and of course, Africa Finance Corporation, and us, Rystad Energy, being a business intelligence and advisory firm, having our critical, our data giving or helping you to make critical decisions, it's quite interesting. So at this point in time, I would like to ask the audience if you have questions, from the team here on stage. Of course, there's got to be questions. Really interesting topic. If anyone has a microphone to take round, show by raising your hand if you have any questions to ask. Yeah. Yeah, there you go. Yeah. Excellent.
Good morning. We've heard the importance of fiscal incentives, not directed at any one panelist, but if I said to you, out of all African governments, who in your opinion is offering the very best in terms of fiscal incentives right now?
Ian, do you want to probably take that?
I didn't get the question clearly. Who is offering the best what?
Fiscal incentives.
Fiscal terms, sir?
Fiscal incentives.
Fiscal incentives.
I think the question was about fiscal incentives, wasn't it? And which countries are offering the best ones, or?
Yes.
Let's go first. I'm going to speak from just our Angola experience, and in a past life I worked for Tullow, and Angola was a country we would have loved to get in, but the fiscal terms and also the country was pretty much off limits because of the large players. I think what Angola has done over the last 5 years, maybe a little longer, but certainly since AMPG was set up, I think that they've transformed the industry with listening to what is required to get investment flowing. And if you measure it on the level of activity, sort of post-COVID, you measure it on new licenses, extensions, and I think that's a pretty good example. If you want to look back to pre-COVID 2019, and you sort of think a little bit more, we're in a competition for capital, and capital will go to the best opportunities. There were rounds back in 19 in South America, and there were rounds in Africa. Argentina offered very, very good fiscal terms because they needed to encourage investment. The rounds in Africa at that stage hardly got anybody invested in coming in. So fiscal incentives to get the investment, we're in a competition for capital, are important. They've got to be a win-win though for both sides. It's not about a competition to the bottom.
Thank you, Ian.
I think
one more person. Oh, okay, Magnus, go ahead.
Yeah,
yes.
The term fiscal incentives, I think it's a little kind of, it tells the opinion that you actually have to give some money to the oil companies. I think we should talk about the fiscal terms. And when it comes to fiscal terms, the most important is stability. And the second most important is risk sharing. So I think that we have to forget a little about this cost ceiling and royalty a little in the ski. I think that in Norway, for instance, in practice, we have almost 90% government take in Norway, and we have no one really complaining about that because it's a neutral fiscal scheme with full risk sharing, and it has been stable for 20 years. So I think maybe rather than requesting some kind of fiscal incentives, you should require stability. But no, the industry is not in the hands, the fiscal terms, but I think that the governments going forward should mature the fiscal schemes to risk sharing, profit sharing, and stability. I think that's the most important.
I think on the stability one, it is so key, and I don't know how many people have followed what's happened in the UK, but the UK sector versus Norway is probably an example of how not to do an energy transition. I think all of us agree that there's an energy transition, but it's about how do you manage it in an appropriate, stable manner. And certainly, if you go to the UK North Sea, it is almost uninvestable now because of the changes over the last 15 years versus Norway, let's say.
We've got room for one more question.
Okay.
Oh, there you go.
Thank you. Good morning, and thank you very much for the insightful discussion. I'm Olajumoke Ajayi from Nigeria. You know, we all know that government, investors, financial institutions don't always finance exploration projects because of the risk, and which I believe is the reason we don't have this appetite for exploration projects. So if government, and my question goes to Ibitola, if government should give good incentives to operators to encourage them to carry out exploratory activities, will financial institutions be open to financing exploration activities? Thank you.
The debt focus that E&P companies have, especially in Africa, there are activities that are not typically designed for debt. Exploration is one of them. And it's one of the reasons why we need to tap into diverse funding sources globally. If we were equity funded adequately, E&P companies will comfortably do exploration activities because the details you would have put forward to investors at that level to provide funding would include how much you want to allocate to reserves restoration and exploration activities. I think it goes away from government incentives only. Yes, the government incentives could help the long-term economic feasibility of what you plan to do, and then probably give the right kind of investors, in this case equity investors, the encouragement to back you up. But it's not going to give debt providers the leap over the barrier, because that kind of activity is not typically designed for debt funding.
Yeah.
I think also she was asking about whether governments could get involved in paying for exploration as well.
No, I think her question was if government could provide certain incentives, will the banks look at exploration activity?
Well, thank you. We would love to take more, but I think we can have that discussion this evening. So Rystad Energy is opening our office in Cape Town. It will be the first office in Africa, so I'm very excited about that. So feel free to join us at Radisson Blu Waterfront this evening, 6 p.m. You're all invited. Please make sure you register. If you don't register, come with your business cards. So I'd like to thank everyone on stage. Thank you very much for your time. And please stick around. We have the renewables and power session starting in a couple of minutes. So thank you. Thank you, Ian.